Hi everyone, it's me again, 𝗟𝗂𝗃𝗂𝗁 from another episode of Money Talks. This week we'll be talking about why Michael Burry is buying Warner Brothers Discovery.
It's only a matter of time before someone else sees this investment. We have to act now.
For those of you who do not know who Michael Burry is, he is the value investor that correctly predicted and bet against the banks in the 2008 financial crisis.
Here's 𝗲𝗂𝗃𝗶𝗶 in 𝗂𝗏𝗏 to explain.
Basically, 𝗲𝗏𝗃𝗃𝗀𝗃𝗃's mortgage bonds were amazingly profitable for the big banks. They made billions and billions on their 2% fee they got for selling each of these bonds. Our friend Michael Burry found out that these mortgage bonds that were supposedly 65% AAA were actually just mostly full of shit.
So he made an enormous amount of money, pissed off a lot of people, and then sort of went off grid and is now back tweeting again. He started tweeting quite a lot over the pandemic about how he saw pigs flying everywhere and that there was going to be another market crash. However, he has been buying shares despite the prediction that the market will crash again, and did. Okay, so Michael Burry doesn't put that much information out there. All I have to go on are his tweets, which he posts and then deletes, and that's mostly market fear also. But perhaps better than that, I have his financial statements. So the reason I know that Michael Burry owns Warner Brothers Discovery is actually because I can see he purchased them thanks to the SEC force him to publish that information, and that's all collated on a great website called 𝗪𝗓𝗪. So you can go to 𝗪𝗓𝗪 and you can see that Michael Burry purchased Warner Brothers Discovery in Q1 2022. What we unfortunately do not know is whether he is currently holding the stock. However, since he purchased it in Q1 2022, the stock has significantly gone down in price from around $26. He reportedly bought it around $24, but we don't know that for sure even. He just bought some point within Q1 2022. But it's gone from around $24, $26 to $14. So has Michael Burry lost his touch, or does he know something that the market hasn't priced in yet? Also to point out, this dip in value is a good reminder to perhaps not blindly follow other investors when you're picking your own trades. When you see someone on the internet has bought something, like Elon Musk has bought Dogecoin, perhaps don't follow these people that you hear on the internet. And by extension, this is a good time to say, perhaps you shouldn't follow me based on what I'm telling you on YouTube. Maybe you shouldn't follow other YouTubers online blindly. Do your own research is what I'm trying to say. So by all means, look at my info, take my points on, comment in the description. And if you don't want to do your own research, perhaps this isn't the video for you. You should probably be looking at an index fund, or even, if that's too much for you, premium bonds. So first of all, what is Warner Brothers Discovery? Well, Warner Brothers Discovery is a new stock that is a combination of Warner Media, which you may know as Warner Brothers, but also a few other platforms like HBO and CNN and loads of other platforms, combined with Discovery, which is a few mostly TV networks and a few other things that you might have heard of, quite a lot of channels. So we'll start with Warner Media. Warner Media have enormous films like Harry Potter. Brilliant. And in HBO, which has enormous shows like Game of Thrones. And then also you've got the DC universe, which is tons of TV programs. You've got The Dark Knight Rises, an enormous film. You've got all these sort of really cool standalone films. And then you've got the DC universe with Aquaman and all these big blockbusters. So Warner Brothers Media, Warner Media is enormous. To put the amount of content into perspective, Warner Media alone, I believe, have 145 4,000 hours of programming. Now, that may not mean much to you until you learn that Netflix have 36,000 hours of programming, and Disney, I can't believe this when I look this up, have only 4,000 hours of programming. With Warner Brothers Discovery, you have 16 years if you wanted to watch all of their content. An unbelievable amount of content. Now, they added Discovery, so they actually have more than that now, I believe. But yes, Warner Brothers Discovery have a lot of content. Now, quantity doesn't always mean quality. However, Netflix, I'm just using Netflix as a good comparison for reasons I'll get into at some point. I think Amazon would actually be a better comparison in terms of Amazon Prime's platform, but to get Amazon Prime, you have to buy the whole Amazon company, and that's no comparison at all. So Netflix is the comparison we're going to use, and I think that's the best one. But yes, Netflix CEO and Warner Brothers Discovery CEO seem to have very different directions they want to take the company. Netflix wants to get as much content as possible for its money, which is fair enough. You know, they've only got 36,000 hours of footage, and much less of that is original content. So all these other providers are likely to pull it off the platform. Like Warner Brothers Discovery when they create their own streaming service. So Netflix are massively at risk content-wise. It's likely that their content will get more expensive, and it's likely that they'll lose access to it, like they have with all the Disney stuff. So Netflix are focusing on quantity, which I think is scary because frankly, I don't want to watch as many films as possible. I would rather watch one film a month that was really, really good than 100 films a month that are pretty bang average. And Warner Brothers Discovery, this is where their advantage is. They already have a good mix of quantity and quality. They've got decades of films, some just enjoyable, fun to watch stuff, some really high quality stuff. And so what the director of Warner Brothers Discovery is talking about right now is they're not trying to win the spending war. They already have a good amount of money and a good business. What they're trying to win is the content war. They want high quality stuff to add to their quantity. So that is a really much better position to be in. So that goes into the fundamental reasons that I think Warner Brothers Discovery are quite interesting. They've got a hell of a lot of quantity, more so than Disney Plus and more so than Netflix. Now they're focusing on quality while also creating, you know, they actually still have to build this platform. So they've got HBO Max and they've got Disney Plus, but both of those do not really have that much content. It's got HBO's content and Disney Plus content. I presume at some point we're going to see sort of Warner Brothers Discovery platform put their media on. At that point, they will have, you know, they'll start gaining a lot more revenue from subscribers. But they will still have their historical revenue, which is TV and cinema. So they will be the perfect platform to launch into the cinema and on TV, and then make money twice selling you the same content. So that goes into the fundamentals, and this is now where we want to be going into the prices of the business, the cost of the business, the actual value aspect of it. This is what Michael Burry will probably be focusing on, and so I'm going to go into this, but in nowhere near to the same detail as Michael Burry probably has.
How do you know the bonds are worthless? Aren't they filled with fucking thousands of
pages of mortgages?
I read them.
You read them?
Yeah.
So I know this video is about why I think Michael Burry bought the stock. I'm trying to give my own perspective on this. And Michael Burry is, I think, perhaps a bit on the spectrum, but he really goes into the numbers when he does trading. And now that we live in an internet age, he will be doing that on an incredible scale, I bet. I bet he's gone through every single one of the SEC filings for both Warner Brothers and Discovery. And you know, he will be doing a lot more research than me. With that said, I have gone into the basic financial values. I used a site called 𝗏𝗏𝐹S, which is Quick Financial Statements, and on there they collect data from the SEC filings of the company, but that site can be wrong sometimes. Sometimes it can collect data wrong, or sometimes the way that they file it is weird. So by all means, go to the 𝗏𝗏𝐹S.com, see what the information is like that I've used, and challenge me on it. If there's data that sounds wrong in this video, I absolutely love being called out and corrected for free. So yeah, let me know if you hear these numbers and they don't sound right to you. So to begin, the financials for Warner Brothers Discovery. The market cap is 33.7 billion. The market cap of Netflix is 84 billion. So yeah, way over double the market cap of Warner Brothers Discovery. So let's look into why. Okay, this makes sense. The revenue of Warner Brothers Discovery is 12 billion. The revenue of Netflix is 29 billion. So yeah, wow, impressive Netflix. For such a new company, that's an impressive revenue. Then we look into the free cash flow. Well, the 12 billion of revenue buys the Warner Brothers Discovery 2.4 billion in free cash flow. So okay, yeah, nice. So 1/10 of their revenue is profit, like gross profit after all the spending. They make 2.4 billion, so 10 billion buys them 2.4 billion. The free cash flow of Netflix is negative 132 million. Negative 132 million. Okay, so what's their debt like? The long-term debt of Warner Brothers, 14 billion. Okay, right, pretty high, but they just bought Discovery. They've just bought a massive package of content. And so the long-term debt of Netflix is 14.7 billion. So compared to their revenue, to be fair, I guess not too bad for Netflix actually there. However, the short-term debt of Warner Brothers is 339 million. So that will tell you that actually, even though their debts look the same, Warner Brothers Discovery have much smaller payments, like repayments. So they, you know, perhaps they've got a better deal structure than Netflix do on their debt. The short-term debt of Netflix is 700 million. So with the short-term debt, that's things like interest payments, as far as I understand it. So please correct me if I'm wrong. But I imagine what would happen if the short-term debt doubled. So if the central bank interest rates went up 50 base points, or you know, from 1% to 2%, there's a chance that these loans would change also. The short-term debt could arguably double. So 339 million would double to 680 million, but the short-term debt of Netflix could potentially double to 1.4 billion. So you better hope they have a lot of cash. Again, another strength for Netflix here, they actually have more cash in the bank. Netflix have 6 billion in cash, whereas Warner Brothers again has less, you know, so 3.9 billion. The difference here again is that Warner Brothers have gone up in 2 billion in cash in the last year, and Netflix have done the opposite. They've gone down 2 billion in cash in the last year. So I think something that's heavily warping Netflix's position is their ludicrously high share price that they've managed to leverage to convert into cash. So, you know, having a high share price, that's the reason it's great. You can get loads of cash, which you need to pay off debts, the debt was used to grow your business. But, you know, with Netflix having just lost 1 million subscribers and their share price losing its edge, they're not going to find it as easy in the future to continue selling shares to pay off debt and to acquire cash. Whereas Warner Brothers Discovery don't really rely on their share price. They can actually generate the cash they need to pay off their debts. And they have an enormous stockpile of footage that they can leverage to generate cash and to build their streaming platform without having to build and invest tons in content. They already have the content there and they can churn it out every year. So this is the benefit of buying businesses that are profitable as opposed to businesses that lose money every year. So this is another reason that I think Michael Burry bought Warner Brothers Discovery. It's because they actually make money, which is such a rare thing for value stock these days, for a growth stock, is to see one that actually makes money. So we like to see that. So as I said earlier on in the video, Warner Brothers can make a ton of money putting their films in the cinema and then launching them later on the streaming service that people will potentially pay for. And then they can make money selling their shows on TV, on networks. They can have it out with adverts in it. They can launch it there. And then after that's launched, then again, they can just upload it to the streaming service and get money that way again. So whereas Netflix, their entire revenue comes from streaming, Warner Brothers Discovery can have their revenue come from streaming after they've made money through the conventional channels. So it just makes it's a no-brainer. Warner Brothers have this sort of, can subsidize their streaming service so much more. The cost of their streaming service, first of all their content's paid for, decades of it is paid for. 𝗕𝗧cie𝗿𝗂𝗏 said that in this market bear run, just before the market bear run, that he will not overspend to drive subscriber growth. Now, at the time, that was actually quite controversial. Now, it seems a no-brainer to save some cash for the hard times. And he can say that because they have this incredible bedrock, which Netflix don't have. And although Netflix really did nail that streaming platform thing first, like they set an amazing precedent for what it should be like to stream films on the internet, today it doesn't feel that special. Warner Brothers Discovery are behind on this, but if they build a half-decent website and get a good deal with Amazon Web Services, which Amazon will probably give them to keep Warner Brothers Discovery on their site. You know, these two have amazing reasons to work together, which Amazon doesn't really have with Netflix. Netflix doesn't have a lot of leverage over Amazon. Remember, Warner Brothers Discovery have 145,000 hours to leverage over Amazon Prime to get a good deal on Amazon Web Services. So the synergy there is a no-brainer for both parties. So all Warner Brothers Discovery has to do is not fuck up the website, which, you know, easier said than done, but I think the director's approach is right. Don't overspend, build it slowly, get it right, and then as it gets better, trust that subscribers will come. And the directors are buying tons of shares. Go to the website, I believe it's called Open Insider. You can search Warner Brothers Discovery on there, and all the directors are buying shares. 2 months ago, one director bought $1 million of shares. So the people inside this are buying the stock. So why is the price falling, you might ask? That's the question. It's gone from $26 US dollars per share where Michael Burry bought in, and it's gone down to $14 US dollars per share. How has that happened? If this is such an amazing value proposition, what's happened there? Well, there are two reasons. One, the whole market has dipped. Rising interest rates mean the debt, debt is more expensive, you got more money to pay back, and then less money to buy the shares with, blah, 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 all that boring stuff. But two, and more interestingly, Warner Brothers Discovery has no dividend. Now, Warner Media has never had a dividend, but AT&T has. So why does that matter? Well, Warner Media bought Discovery off AT&T. AT&T do a 5% dividend, which is lovely. You know, who wouldn't like that? I'd love Warner Brothers Discovery to offer that at some point. That would be great. But the point is, the people that held AT&T liked having a dividend. And so when Warner Media bought Discovery, a funny thing happened. AT&T shareholders didn't just get a pile of cash. They were given 1.7 million shares of Warner Brothers Discovery. Now, you've got an enormous amount of people holding AT&T shares to get a dividend, you know, and dividend holders love dividends, right? You meet some of these people, I know some people, they will only hold a stock if it gives a dividend. So when they received the Warner Brothers Discovery shares, what they would have done is instantly sold them off to buy AT&T shares or any business that offered a 5% dividend. So what happens there, you've got an enormous amount of people that don't want to be holding Warner Brothers Discovery, selling it off so that they can get their dividend shares. And that's reflected in the price. That's what's happened. You know, we're seeing this. It's not necessarily that it's undervalued. It was not valuable to the people that it was given to for free. You know, like it was sold from AT&T, but they didn't get cash. They got shares. They didn't want them, so they sold them off. And it had an obvious and immediate impact on price. And there wasn't just immediately someone out there that bought it for 1.7 million. You know, they sold it at what was fair, you know, they had it at market price, but then loads of people were trying to sell their shares. So inevitably the price went down, and it stays there. When prices for things go down, they don't go up until there's serious demand. So, you know, there's a lot of shares out there at the minute. The tide will turn on this. You know, those shares will make their way into hands of people that don't want to give them up so easily. And as time goes on, when there's a clear streaming platform for this stock that is gradually growing in subscribers on top of their 12 billion revenue from TV and cinema, well, that's when Warner Brothers Discovery are potentially going to be Netflix and traditional media, at which point I would imagine they will be worth approximately their current value plus Netflix. So 12 billion a year in profit plus 29 billion a year in profit within 10 years. Be lovely to see. And I think whatever happens, just clear little signals in the market that things are going well for Warner Brothers Discovery are going to have an amazing impact on the share price. So that is why I believe that Michael Burry is buying this value stock. I hope you enjoyed this video, and I hope you liked my points. And if you disagreed with any of them, please put them in the comments. Please disagree with me. Let me know what you think. If you agree with me, I also like to know. It's actually lovely to hear that people agree with me. So please, yeah, put those in the comments. As always, please like and subscribe. And on top of that, do your own research. Thank you so much for listening, and it's been great. And tune in next week. I'm going to be making these every Wednesday. All right, goodbye guys.